Whether you are in the US, in Europe, Australia, Asia, or in Africa, due diligence comes with its challenges, right? Especially if you are looking for businesses to acquire below the 2 million EBITDA mark, very often you'll find these businesses with not very reliable internal control or accounting reporting system, and that in itself increases your level of risk in terms of conducting your due diligence. And I want to do this video to show you what I do when I have a deal that is in an emerging market, and I'm going to be using an example, especially in Africa, in Angola, of a deal that I'm looking at, that I'm helping uh, a team to make or not make an acquisition. So just a quick background in this deal. Um, we tried working with a local accounting firm to help with the due diligence. And by the way, it's an accounting firm with fairly good reputation in the area and in the country, but it didn't quite know exactly what to do because the owner of these fi- uh, educational institution didn't even have financial report to provide the accountants to do the financial due diligence. So when I came on board, I was like, okay, let's have a conversation. Let's understand the deal, the operations at the business, and then we're gonna recreate the financial statement based on these. And all we're gonna have are estimates, and we're gonna find a way to tie some part of these transaction price to future performance of the company based on our estimates of what the operation looks like as of right now. So let's look into some of the data that I asked the owner, this educational institution for. So I just in to start to start the conversation, right? I asked them, hey, can you give me some data about the facility? How many classrooms in Angola? There is like two period student go to school. The first period of classes, or I'll call it shift, is between 7 a.m. to noon, and then the second group of students come between 1 p.m. to 5 or 6 p.m. So that's kind of how things usually work. So I asked for, okay, how many classrooms they are. There are two period where students are taught. There is one multi-use sport facility, one lunchroom, one room for professor, and two admin space. And about the average number of students per classroom is about 30, and the average tuition is 10,000. So based on this information, we can easily recreate estimates revenue, right? So let's do that. Estimated revenue, right? Revenue. Oops. Okay. Estimated revenue. Great. So it's a pretty straightforward mathematical model, right? So you have the number of classroom times the number of period the student will be attending classes, right? Times you also have the average number of student per classroom times the average tuition. That amount is in kwanzas, by the way, right? So we have about 15 million kwanzas in revenue. This is gonna be per month, right? I'm not going to estimate, for example, bad debt here just yet. But that's how we had to recreate revenue to have an estimate. So if we are looking into yearly revenue of figures, so we know months, we're gonna have 12 months. So in essence, we break that down, right? That's gonna be our yearly estimated revenue. 187 million kwanzas. So let me put a note here. Amounts in Angolan kwanza. Angolan kwanza. Oops, I can't type. Okay, so amounts in Angolan kwanzas. So that's what we have. And then we're gonna be asking the owner, which we did, okay, tell us how you run the facility, right? So let's make another assumption here, number of instructors, right? Because that's the biggest cost driver in educational facilities. So they have 20 professor. I'm just throwing a number here, and the average salary it's around 70,000 per month, Angolan kwanzas. Okay, so with this in mind, we can do cost of revenue is gonna be just the factor, or it's gonna be 20 professors times the average salary. And that gives us, I'm just gonna copy this format here and paste it below format. Great. So, and then I'm gonna have my gross profit, right? So my gross profit here is around 14 million. I'll keep this constant. Oops. Let me lock this cell. All right. So this is my gross profit. So if I calculate gross profit margin, I'm going to have my gross profit divided by revenue. So by having this here, right, we have an incredible gross margin. So let's look into the operating expenses. Expenses. Okay, so when we're looking into an educational facility, right? So some of the operating expenses would be utilities, right? Utilities, and I'll show you how you can actually, you know, uh, come up with ways to test the validity of these ranges as well. So, for example, in revenue, a lot of schools, K 12 of universities, would have some of their revenue coming from, for example, student paying at the counter of the facility, or they will be making deposits. So you can look into the bank deposit, but you can't necessarily figured out, okay, what the owner is showing in the books as the amount they collected makes sense, other than trying to test based on your estimates and what they are showing in their books. And the let me give you an example. So in this case, we have 15 million. Let's say 70% is made as bank deposit, the tuition collected through bank deposit. So you can look and see, calculate the bank deposit. If they come to 70% and the remaining 30%, you can look into their internal ledgers to see whether or not it represents another 30%. And of course, there are things like bad debt, uncollectible accounts, and for these ones, we can estimate them based on what we know about, the financial conditions of the families in the area of the students who attend the facility, the institution, as well as, we can just look into some industry benchmarks, right? So this is a little bit of how we can look into revenue and test it to see whether or not it makes sense. And then in the operating expense side, you can look into utility bills, right? So oftentimes, right, you will encounter this in places like Angola and other emerging markets. Utility, even for services that are like water, electricity, or gas, right? The facility or the school will be paying utility, and sometime, the agency is not keeping good track of the good records of the expenses being paid. So the challenge there is estimating, right, what in a normal operating space, right? What would those expenses actually be? So you can ask around, a facility of this size, bringing, for example, an engineer to see, okay, how much electricity consumption it requires, and what's the average fee, right? The average fee, let's say per kilowatt, is in that area, for example, right? And based on that, you can actually have a good idea for what these costs would look like. So for our example here, I'm just gonna throw a number there. Let's say, 100 Angolan kwanzas per month, okay? So once I have that, I'm also gonna say, supplies in school, it's gonna be around 150,000 per month. I'm also gonna throw here another cost that we usually see. For example, some school, transportation. Let's just say it's gonna be around 300, right, per month. And we're also gonna throw there another expense. We're gonna keep this short just to pass the key idea here, right? So we're also gonna say the other operating expense. Let's just call them other expenses to keep this short, right? Other expenses, and let's put, just a whooping uh, 500,000, right? So our total OPEX is gonna be that, and then 1.05 million, and then our net or EBIT, let's call it uh, EBIT, earnings before interest and taxes, is gonna be our gross profit minus our OPEX, right? So we're saying that, okay, EBIT margin, it's gonna be still fairly incredible, right? So we have an incredible EBIT margins here. Like, this is just an example, but the idea that I want to pass here is that even in emerging market, I work with accounting businesses here in the US, and part of my job as an investment banker, I have to conduct a lot of due diligence on the sell side, on sell side transactions, and I still see, books that, just make you think, okay, how the owner of this business run the company with these kind of records, right? But in emerging market, the challenge is a little bit, you know expanded, because the alternative ways that we use here in the US, for example, industry benchmarks, or verifying through other third-party provider costs, like, so if someone is using, a professional accountant and QuickBooks, we can estimate by calling the accountant for fees. We can look into QuickBooks fees and determine how much this cost would be. But in markets like, Angola, there isn't really a way to, reach out to some service provider. One, because oftentimes they're reluctant to, provide information. The best approach is really to use professional judgment and come up with ranges and estimates that make sense. And by the way, for the balance sheet, the way we had to reconstruct it, which I'm not gonna go through in this video because it's just gonna make it much longer. We actually had to hire a team of architects and a construction engineering firm to look at, what is the replacement cost of this property. If we had to build a similar property, how much this would cost, right? And that was the balance we use, or the figure we use for, the book value of the facility, right? And then we remove some of the depreciation to arrive at the net book value, in a way. So what I'm trying to say here is, investing in emerging markets, yes, it's challenging, but it's still viable. It's still possible. If you're working with people who understand the market, right? If you are an investor and you're looking for opportunities in emerging market, working with people who understand the market, who have really strong and deep insights about how the market operates, the various dynamics, the various challenges, and have a good understanding of financial reporting, due diligence, M&A processes, right? It gives you a lag. It gives you a strong um, possibility to actually make money in this space. So I wanted to share this just to show you, how I navigate the process. And if you have question or you're working on something and you'd like some help, do not hesitate to reach out. I'd love to connect and learn as well what your approach has been and what has worked or not worked on your end. I hope this was helpful, and I will see you in the next video.